What's going on, everyone? Hootmoney here with another video for you guys today. Today we are going to be talking about Rdbx and HCDI stock. Rdbx in particular has been going on an absolute tear. It was up over 70% on the day last time I checked, and HCDI is currently sitting around 15% on the day. Normally speaking, I'd only be making the update on Rdbx. However, I wanted to make this update because I do think that a lot of the money being made in Rdbx eventually will be flowing over to a stock set up very nicely as well, like HCDI. So that's why I wanted to make these videos, but we're also going to be doing them separately. So if you're only here for one or the other stock, you guys can skip ahead to that part of the video. Also, we hit both of these trades in Hootmoney trade alerts. We got an Rdbx at $2.10 and we got an HCDI at $2.45. I'll throw the entries up on the screen right now. As you guys can see, we hit them. Hootmoney trade alerts is that first link in the description. So if you don't want to miss out, you can join Hootmoney trade alerts. But with all that being said, let's jump right into today's update. All right, so plain and simple, the reason why I do believe HCDI will eventually see the same limelight that Rdbx is seeing right now is purely from a social media or just a media perspective. We're looking at Benzinga Pro, we're looking at HCDI or Rdbx. So results for Rdbx or HCDI will be showing up. You don't see too much news for HCDI yet, and that's because it's flying under the radar to some extent. But Rdbx now, especially today, you're seeing tons and tons of news. We're seeing very similar trends in both of these stocks. Both of them really did pick up social media sentiment on Twitter, and HCDI is now creeping up there. So that's what I'm seeing in HCDI personally. If we're looking at the short squeeze leaderboard, HCDI is at number 2 on it. I do believe Rdbx would likely be at the number 1 spot ahead of aterian if it was something that fintel was covering. I mean, fintel does have a page for Rdbx, however, they don't have a short squeeze score, as you guys can see, so it doesn't show up on that short squeeze leaderboard, but it's definitely the number 1 spot. So let's just say number 1 on the short squeeze leaderboard is Rdbx, number 2 is aterian, and then number 3 is HCDI. So that's exactly how we are going to be looking at this. I'd like to quickly thank the sponsor of today's video, which is Moomoo, a licensed FINRA broker that does absolutely zero payment for order flow. They're running this promotion, as you guys can see. Actually, this is the promotion on the screen right now, where all you have to do is deposit $1 and you get up to $7,000 in free stock. And on top of that, the probability of getting an Amazon stock, so AMZN, that's currently going for, whoa, how much is Amazon even going for right now? That's currently going for $2,435. The probability of getting that stock is doubled within the next 35 hours. So it's a fantastic promotion. I highly recommend you check it out if you guys have not already. It's the second link in the description down below, or first link in pinned comment section. Actually, it might be the second link in the pinned comment section too. Nonetheless, let's get right back into today's video. Alright, starting with Redbox Entertainment, or Rdbx, as you guys can see, up 61% on the day as we speak. Loads of volatility, loads of halt. Starting with the daily chart on Market Cypher, this is what I use to do technical analysis. There is a link below in the description to check it out if you guys want to learn more about it. But just looking at Market Cypher, this red money flow is curving up and it's about to cross over the 0 point, meaning that we are going to be going into green money flow, meaning that an uptrend is forming. Now, there's not really enough information to determine what we can do on this daily chart because it's just running parabolically. So we're going to have to cross into lower time frames. But the one thing I want you guys to realize is that the day before it really started ripping, Market Cypher gave it a red dot. Now, this is very common in a lot of squeeze stocks because market makers are going to be trying to push something down, make it look like it's breaking a technical level and look bearish, right? And the moment that it flips bearish and they're able to trigger a lot of sell orders, whether it's a stop loss raid or whatever, the moment they flip it bearish, they can load up, right? immediately drive that price higher, and it's essentially kind of like a long squeeze. I call it a bull trap, but pay attention to that, because market cipher and as well as your technical analysis indicators as well are going to be giving these bear trap signals. So that's the one thing that I can show you guys from this daily chart right here. Moving into the 4-hour chart, we can get a better idea of what essentially is going on. So it's been overbought for a minute now. So ever since the market opened this morning, it was still in this overbought territory. It's still continuing on the bullish side. So again, the 4-hour chart not really giving me any information other than the fact that it is overbought, but it's not really telling me when it could stop being overbought. So we'll move into the hourly chart. Hourly chart, we just saw a new high right here. So the high of the day was $10.68. It also got a red dot. So similar to what we were seeing on the daily chart, it was getting the same thing, the same little trap on the hourly chart, right? And as soon as it got the red dot, it went higher. So that's the trap that happens in these squeeze stocks. It looks like it's overbought. It looks like the rally has finished, but it continues to go, and they're just trying to get you to sell out and take profits. Other than that, there is some bearish divergence here. So if we're looking at these two blue waves and we're connecting the dots, you can see that it is trending downwards. So the slope of this line connecting the two red dots is on the downside. And if we look at this price action where this red dot was printed and this price action where this red dot was printed, the price action has been moving up. So let's just connect those two for simplicity purposes. So there is bearish divergence right here on the hourly chart, meaning that if it does start to fall and we start to get maybe like a short sell signal, so that would be like a red X on market cipher, it would mean that volatility could start to pick up. So overall, I mean, this is overbought. It does have bearish divergence. It doesn't mean that the run is over. The run can definitely continue, but it does get a little bit more risky, which is why I never say to just go in and enter something when it is in a position like that. Also, if we're just looking at the 15-minute chart, it did have a lot of green money flow. This actually can show us some of the most information total, but what you're seeing is the green money flow is coming down. So it peaked out in after hours on Friday and has been coming down ever since, even though the price has been moving up, even though it's up 65% today. So overall, that is hinting that the rally could be perhaps slowing down. And on top of that, we are seeing bearish divergence throughout the day. So if we connect this red dot to the potential next red dot, and we're just anticipating that there's going to be a VWAP crossover and a potential red dot signal right here, that would be more bearish divergence, which means it could come down harder. Looking at the regulation threshold security list, Rdbx is sitting pretty on this list. HCDI is not on this list, but I do assume it'll likely show up on this list very, very soon. Moving into fintel, no short squeeze score for Rdbx, but they are showing a few other statistics. So no shares available to be shorted, 163% borrow rate, and a very high short volume ratio, over 50% each and every single day. All right, so looking at some company specific news, Redbox recently secured a $50 million line of credit, and their CFO did get chopped. Now, a huge reason that their CFO did get chopped is because the fundamentals of Rdbx really aren't that strong. So if we're just looking at the balance sheet right here, you guys will see that there's not too much health. It has negative equity, so minus $63 million in shareholders' equity. That's not a great sign whatsoever. They're also propping up that equity with goodwill and intangible assets. So they have 147 million of goodwill and then 124 million dollars worth of intangible assets. These aren't something that the company can just liquidate and sell for 147 million and 124 million dollars respectively. Goodwill and intangible assets are stuff like patents. They're things like the additional amount of money that you spent acquiring a business, right? If you bought it for a premium, it doesn't mean you can just sell that company for a premium as well. So it's all marked there as goodwill. It's not really liquid capital that the company can access really, really quickly. So I don't even like to count it when I'm looking at a company. And that's what makes up majority of their assets. And they're still not even at a positive equity position at minus $63 million. So tangible book value of this company will just do minus $62 million, minus 147 in goodwill right there, and then minus 124, and that would give us minus $333 million of tangible assets. So that's really not good. The company is really not in good financial health, and that's a good reason for why the CFO might have been, kicked off the team. Another important metric to look at for the balance sheet is the total current assets, because if there are more total current liabilities than total current assets, the company might be in risk of default and they'll be in a desperate need for cash. So you can see right here, 65 million of total current assets, and then total current liabilities are at $124 million. So we'll pull out our handy dandy calculator. Total current liabilities, 124 million. Total current assets minus 65 million. That would leave them in excess of $59 million of total current liabilities that are due within the current year. So they don't have that money, so they're gonna have to raise it somehow. So that's where the 50 million line of credit does come in. So now they have $50 million to meet short-term obligations, but if they have a $67 million deficit of current liabilities, that means they still need to come up with $17 million somehow. And the only real way they can do that, unfortunately, is probably from some type of offering. And now they have the April 22 HPS lender warrants exercisable only if certain debt conditions are not met. So that could potentially be the risk of being diluted, the risk of offering that could be in Rdbx. But it's not currently registered, so it's nothing to worry about as of yet. But that is something that will be hanging over your head, and it could lead to some increased risk in holding this thing overnight. Looking at the Rdbx Ortex data, this is absolutely insane. 354% cost to borrow now, so it's getting real spicy, and they don't have options to really hedge any of these short positions. So there's probably an increased reason for shorts to cover in a stock like Rdbx than, let's say, ater, for example. That's why I think Rdbx is on the top of the short squeeze list, given that this short squeeze list actually included Rdbx with a short squeeze score. It has 100% utilization still. 51% of the float is currently being shorted. Apparently 96% of the float is on loan right now. That doesn't make any sense. That would mean that only 3.7% of the float is not being loaned out currently. Put that into perspective. Only 3% of the float is not actually being lent out to some other party. So you don't own your shares. Straight up, you don't own your shares. Your shares are in possession of someone else right now. It might say you own your shares, but you don't. 96% of these shares are on loan. So all of you Robin Hooders, you definitely don't own them, all right? Weebulers, you definitely don't own your shares either. On top of all the phony baloney, fake share nonsense, there's been tons of exempt volume. Last Friday, there was 329,000 worth. I mean, this is only what, a 3 million share free float, 2.77 million. They're doing all of this, guys. Something's just not adding up here. So seriously, in terms of a short squeeze, this is the best setup in the market by far. No denying of that. The only real risk is the fact that the company is going to have to get money somehow. I mean, this company does need money, and like we were talking about, there were those April 2022 warrants. Moving into HCDI, again, we are looking at Market Cipher. Here we are looking at the daily chart. As you guys can see, earnings are scheduled for May 12th, and this is factual. We have confirmed this with the company, and until earnings, we're probably going to see some volatility, some type of pre-anticipatory run leading up to that date. Looking at the daily chart here, you guys can see there was a VWAP, a little fake out right here. So again, these short squeeze stocks love to do this, where they're trending down, they're having some divergence, they're looking like they're ready to start coming right back down, and when it's right about ready to come back down and it looks like it's topped out and it looks like the momentum is drying out, fading out, that's when it sees its next leg, and that's when the momentum comes back up. So right here, you could have potentially interpreted that the run was coming to an end, momentum was slowing down, and this was on April 28th, but the next 2 days ended up being very, very green. So recognize when a stock is potentially setting up for a trap where it's not going to be following actual technical analysis all of the time. Moving into the 4-hour chart right here, you guys can see, I mean, same thing happened right here, and this was in pre-market this morning. It got the red dot. It looked like it was ready to come down. Next thing you see it, boom, it shoots right back up. So that, my friend, was a bear trap. We're going to get more juice once we actually move into some of the lower time frames. Let's start with the hourly chart. Hourly chart is showing a red dot right now. Potentially we could be seeing some cool off pressure, or we could see a potential trap. As you guys can see, the last two red X's, so this red X and this red X, both of them are short sell signals. They ended up being good buy signals, and that's a classic characteristic in a stock that's highly shorted. Right here, this exact same thing happened. The short sell signal ended up being a very good buy signal. Same thing right here. I mean, this was some of the lower price action that HCDI has had. Same thing right here. Honestly, all of these have been pretty decent buy signals. So just because there is a red dot doesn't mean the run is over, especially if there is a squeeze. And talking about a squeeze, I don't think it's happened yet on HCDI, which is why I wanted to add it into this video. If we're just looking at the volume, yes, the volume has been picking up the last 2 days, but it's nowhere near what the volume was on April 22nd. And you can see that there was a huge volume spike, and I think that was likely some type of short cover. So until I see a volume spike like we did see here on April 22nd, I have no reason to let go of my shares. There might be a few swings back to like maybe 310 or between $3 and $3.10, but overall I have no real reason to let go of my shares as of yet. And what I'm going to be looking for is a potential bounce off of this higher up resistance level, now turning into potentially a support level of $3 per share. And actually, if we zoom in earlier today, we saw something like that where it did come down on this 15-minute, but it bounced directly off that $3 per share level, and now it is forming some higher highs. So another important thing about this chart is that it was showing reaccumulation. So if we pull up the path tool, you guys can see the classic Wyckoff accumulation pattern was essentially formed right here in HCDI, and we can show you guys if we just follow the chart. I've been preaching about these Wyckoff accumulation and Wyckoff distribution patterns forever, and we got a very, very nice accumulation, which is a bullish pattern on HCDI. And the reason that we know that is because of what exactly happened in this price action right here. If it were distribution, it would have given up this white line right here and potentially seen some more downside. However, accumulation suggests that it comes down one more time, turns this previous resistance level into a support level, and then bounces right off. So we're definitely in an accumulation pattern, which typically means that a stock runs parabolically after it bounces off of this level. So again, here's your reminder to learn those Wyckoff accumulation and distribution charts. They sincerely help you with trading these highly shorted stocks. Anyways, again, HCDI is not currently on the threshold list. It's number 2 on Fintel's short squeeze leaderboard. 0 shares available to be shorted, as Fintel suggests right there. And the borrow fee is up again, now showing a 91% rate. Short volume ratio has been super high, and we've been seeing short exempts picking up over the past week as well. So market makers are definitely trying to be pinning this one down. And that's pretty much all I got for that. Let's move into the Ortex. So there was some company specific news. So they did announce their earnings. That's going to be on May 12th. They also mentioned that they had a contract for $278 million with Kidder Matthews. And since then, they also mentioned that they did sell a few different apartment sites. So they sold this Terra Heights apartment for $54 million right there. They sold this one for $7.2 million, and they sold this one for $12.2 million. So that means in total, the company brought in $82.6 million worth of revenue. Looking at HCDI's income statements, you guys can see they haven't brought in this much revenue, at least on a quarterly basis. And then on a yearly basis, that's usually what they bring in revenue alone. So they brought in $72 million. Keep in mind that has also increased 44% since 2020. So they reported $50 million in revenue in 2020 and then $30 million in 2019. So fundamentally fundamentally speaking, this company is absolutely printing money, and their diluted earnings per share in 2021 alone was 17 cents. And just taking that number, dividing it by the current share price of $3.17, that offers you about a 5%, 5.4% return year over year on your money. So there's really absolutely no reason for people to be shorting HCDI currently. I mean, it is very fundamentally undervalued, even on a fully diluted basis. We can also see their total equities are listed at $99.74 million. So unlike Rdbx, they don't have any goodwill and no intangible assets. So that $99.74 million is completely tangible book value right now. And if we compare that to their market cap of $41 million, they're trading well below their tangible book value. They're also a company delivering about a 5% return to shareholders per year right now. They also just secured a $278 million, a $278 million contract for more houses, and they sold a few more. So they basically already sold a bunch of these houses that they already had. They are absolutely printing money. There's absolutely no reason for a short seller to be in this stock, even on a fully diluted basis. So they do have a dilution risk, but again, fully diluted, the company is bringing in 5% per year. So even if they had all 45 million shares, the company still should not be shorted. There's no reason to be shorting a company that is bringing in profit for shareholders. And typically what this means is that the company might even come in and try to squeeze the shorts themselves by buying back shares or even offering a dividend. So there could be increased dilution from either warrants or convertible preferred, about 16 million of either of them. It says on Dilution Tracker that there's only there's minus 0.5 months of cash left available, but that's because they delayed their earnings, so they have not yet reported their Q1 earnings yet, and because of that they don't have their updated cash position, and it's showing a little lag right here. So don't worry too much about that. The company does have money. So here are the warrants. The exercise price on this bad boy was $2.97, and these bad boys are for $5. So there is some risk right here because the company is currently trading over $2.97. So pay attention to that. The next dilution risk would be from the convertible preferred. So that has a conversion price of $4.50. $4.50 right here as well. But again, the reason why I'm so confident in HCDI is because it's trading well below that book value. It's growing as a company each and every single year. And overall, there's really just no reason for this company to be shorted. The short squeeze statistics are also pretty juicy. I do think we see some upside from the current price level. It's not financial advice. You guys do you, I'll do me, but that's what I'm thinking. And also, just from a social media trend standpoint, I do see Rdbx, a lot of the money, at least from that stock, flowing into HCDI in somewhat the near future. Anyways, that's about it for the video. I hope you guys have enjoyed. As always, drop a like on it if you guys did. Subscribe to the channel if y'all are new, and hit that post notification bell so you never miss my timely updates, or when I do go live. You guys need to hit that post notification bell, or honestly, you are missing out on some alpha on this channel. Also, if you want some of these entries before they absolutely blow up, we like to hit them over at Hootmoney Trade Alert. So that's that first link in the description down below. We got in early on Rdbx at $2.10 and HCDI at $2.45. So we did get in early on these plays. Hootmoney Trade Alerts, in my opinion, is an absolute no-brainer. That's the first link in the description down below. It's also in the pinned comment section. And check out Moomoo if you guys want up to $7,000 in free stock as long as you deposit $1 on their platform. That link is below in the description and pinned comment section as well. Anyways, my friends, I hope you all enjoyed the update. I'll be seeing you guys next time.